Let's get back to oil, though. OPEC does plan in the near term to increase production. That's bearish. And you can see oil is under pressure. But also, it's looking at a halt in these production increases. Our guest says we could see oil drop into the low 60s and it might get down into the 50s. We're joined by Rebecca Babin, Senior Energy Trader at CIBC Private Wealth. Thanks very much indeed for joining us, Rebecca. We did hear earlier from an analyst at Eurasia that some of these production increases are really just for public consumption. And a lot of this oil is already on the market via cheating or other routes.
So there is some truth to that. I think when we look at the production increases that we've seen so far, the 410,000 barrels that were announced last month, we saw about 200,000 of those actually hit the market, mostly from Saudi Arabia, exactly due to the reasons you're talking about. Either the country is already at their capacity or they're already producing at the level that the new quota is at. However, that doesn't mean at the margin, as we start to see these increases continue, particularly we will see barrels from Saudi Arabia on the market from these increases. And what's also really important to note here is during this last couple of months, the localized demand in the Middle East for crude oil has been very high due to the summer burn and the high temperatures that they use crude oil to kind of provide the energy for their cooling systems. As that subsides, the more of those barrels that they have on their quota will be hitting the market. So I wouldn't say that the coming potential, and again, I think we should reiterate, these are potential. The reporting says it's a sure thing, but everything is very fluid with OPEC. But should we get on the August 9th meeting an additional 500,000 barrels of crude coming to the market as they unwind their production cuts, we will see more of those barrels on the market from Saudi Arabia, particularly as they try to increase, the lion's share of what they've unwound. So we've had a minimal impact thus far, but I expect as we exit the seasonally strong demand period we're in and more of the barrels are on the market, it might have a much larger impact in that kind of September, October period.
That's interesting. You gave us two themes there, that strong demand for cooling in the Middle East, and can you blame them at this time of the year, has been inflating oil demand. But also then we could see new supply still coming as we enter a lower demand period.
Exactly. And I think when you look at what analysts are saying, and I would reiterate that this is a very consensus view that we're going to be oversupplied in the second half, which is why when I look at the downside, I say, low 60s, maybe high 50s as we kind of absorb this supply. But I don't see this massive pullback to the low 50s because the positioning in this is so well telegraphed that I think the market is somewhat set up and ready for it. But we are going into a softer demand period, refinery maintenance season, so the refiners are pulling less crude, and where OPEC's bringing back additional barrels. And agreed, some of it is just a paper number, but there are some real barrels that are going to come back, and that's going to take some time for the market to work through. The wild card here is, what happens with demand? We know that supply is likely coming, and we're seeing it. It's on the horizon. We're pricing it. We're putting it down in our models. Does demand, which actually has been really resilient for the first half of the year, kind of really take that downward slope that I think many analysts are penciling in? Going from 1 million barrels of demand growth, which we've seen kind of in the first half, down something closer to 700,000 barrels of demand growth in the second half. If we start to see more resilience, we could see an upside surprise to prices, because I just don't think that's on anyone's radar.
Your trading strategy, or one that you suggest now, is buying dips if oil gets down to the low 60s or even the high 50s, but you think you'd be a seller if there was a rally into the 80s.
Yeah, so I would say I kind of see those big tails that people are pricing or traders are pricing. I think they've inflated the tail events of these huge supply risks, and we go above 80, the hundreds, because of Strait of Hormuz or geopolitical risks, and these really big tail risks to the downside because tariffs create a huge demand vacuum, and we're at 500,000 barrels a day of demand growth. So I kind of feel like the tails have been inflated, and this middle range is being kind of undervalued undervalued and you can kind of trade around it. So I think actually we are range bound. We have spare capacity to buffer on the upside. And I think we'll see production come off if we move into the 50s pretty aggressively from the US and otherwise. So I'm comfortable with the range. And I think that's the way I think I'd trade it at this point.